Should we buy or sell Ritchie Bros? Auctioneers? First off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So I have a theme here that I call self-storage and auctions. 41-ish% here from the 52-week low. But we have seen a minus 21% pullback. So the thing about this theme is that it gives us a bit of an indicator of whether there is economic distress in the overall economy. Because, economic conditions will definitively affect whether people use self-storage and auctioneering services. We do see that Ritchie Bros auctioneers, obviously they are in the auction business. 21-ish% from the low, minus 23% pullback so far. Here is their company's website, so where the world buys and sells heavy equipment. So here you can see they have all kinds of heavy-duty vehicles that are auctioned. So the thing is that there's been all this talk about major supply chain issues. So initially, you had a lot of people who had this very simplistic analysis who thought that, well, that is actually very bullish for all kinds of second-hand market companies because given that people can't buy the new stuff, they will have to buy used. But here's the kicker. It's not simply the case that there's problems making new vehicles, there's also supply issues in terms of parts, which means that if you buy a used vehicle, there's a pretty high chance that sometime in the near future you will have to replace parts that break down. And there's also supply chain issues with the parts. So yeah, everything is very interconnected, so yeah, it's very messy. It just is. But yeah, we did see this ridiculous spike in a lot of second-hand market cars and stuff like that just flying off the shelves. But yeah, I think that, a lot of those buyers are going to be like, when they need to change the parts. Okay, anyway, here's the chart. What I do find interesting about this stock at the moment is that we are very close to a very important moving average. So let me just draw that in. So we have had this super important blue 100-week moving average. It has been a resistance, and it's a very real possibility that it will become resistance now because we are below it. The caveat is that it also has pretty good history here of offering support. So it's a very key moving average that is watched by a lot of people for those reasons. As such, it is something that it's prudent to have in mind at the moment, because if it functions as resistance, then it could be a very nice shorting level. When we go here to the daily data points, in that case, we do have another moving average, and that is the 50-day moving average in green. So it has functioned as a support level in the past. It's been a good place to buy the stock. But as of late, it's been a magnificent level to put on short positions. So this is a key moving average to watch going forward. So both on the weekly and the daily data points, we have a super key resistance level. Here on the dailies, we could also make a pretty decent case that we have something that looks a lot like horizontal resistance. All the way back here. Here we have a cluster of resistance levels. A bit here as well. So the theme here for the technicals is resistance. The only thing that is, it's a bit bullish that yesterday we did close above the 50-day moving average. So there is some sign here of the bulls fighting. But the bulls still have to contend with the blue 100-week moving average and also the horizontal resistance levels. When we look at these indicators here, we are emerging from a rather oversold level. So that is something that could inspire the bulls to buy a bit more. Let's look here at the daily data points. So in terms here of the daily RSI, we are actually at the same level that triggered this pullback when we met resistance at the red 200-day moving average here. And also, if we go back here, yeah, basically, yeah, here, the same RSI level. You see that while we have been making higher highs and higher lows recently on price, we have not seen corroboration here on the accumulation distribution indicator. When we look here at Finviz, they draw this diagonal purple trend line, and that one is also a resistance level. So in terms of the line in the sand here for Ritchie Bros Auctioneers, I think that resistance, MA, and we have horizontal. Yeah, so there's a bunch of resistance levels. I think we might write MAs in plural here. So in terms of giving this one a score here on the technicals, we do have a setup that I think is more appealing to bears than bulls, but we don't have like an extremely bearish setup. What would be even more bearish, that's if we were like more overbought. But I do think that, yeah, one could give the bears here a -3. Next, we will look at seasonality. When we look at the last 5 years here, in terms of the seasonality, we usually actually see some strength here heading towards mid-May. That also is the case over the last 7 years in blue and the last 10 years in red. When we look here to the left, over the last 5 years, we do see that April is very strong, but May and June are weak. Over the last 10 years, we do see that March, the current month is very mediocre, but April, May very strong. Then the last 20 years, we do see that April is a very strong month. April is, however, followed by some more mediocre months. But there's no doubt about it here that the seasonality it's strong. But I think that seasonality is even stronger when you have like an increasing strength or more sustained strength, from month to month. So yeah, the current month, March, is a bit, it's not like that strong, but April is very strong, so I think that I will give this one to the bulls. But yeah, let me give them a 3. Then we look at the fundamentals. So Sachs, they have a number 5 strong sell. That's not bullish, obviously. So it means that, the earnings estimate revisions, they have it here. So yeah, the earnings estimate revisions for Rba is going down. D-value, F growth, so the style scores are also bad. The industry rank is bottom 1%. Wow. Auction and valuation services, so it could not be worse. You could, of course, be a bit contrarian and argue that it can't be downgraded, and that is sort of true, though. But there is a but there, okay, because the biggest movers in the market, the big institutions, they have far more sophisticated scores than this. So the big money, they have ways of obviously knowing whether it goes from very bad to super bad. So yeah, it can actually get worse. But as far as those who use the Sachs ranks, they see this, of course, and only that primarily. There is a 1.71% dividend, and that's, it's a bit of a dividend, but not enough to hold on to the stock. The insiders are selling. But there was a bunch of buying earlier this month. But the latest moves here are sells. They just are. Yeah. Then we go here to the consensus estimates. 11 analysts are covering the stock. The average target price is minus 4.7% below the stock price. Highest is 19% above. Lowest is 28% below. So in terms of giving this one a score, I think I will have to give it a -7. The Sachs ranks were extremely bearish. We did see that the price targets were not helping the bulls either, and the latest moves from the insiders were sells. So yeah, Next on, we will look at relative performance. There is no, self-storage and auctioneer ETF out there, so it's a bit difficult to really know which industry is this company in. So when we look here at the correlation with S&P 500, it is at 83, 61% with the financials. One could, think that maybe auctioneer business is very much financials, but not in terms of the long-term correlations. But 88% here with the XLI, which is the consumer discretionary ETF. And then XLI, like I, is for the industrials, and that is 75%. Short-term correlations, we do have 61% with SPY, with XLF, 37, 74% with XLI, and then XLI, the industrials, we have 65%. So the strongest correlation we do get here is with the consumer discretionary. Here we have the XLI. Okay, so the thing is that it is currently bouncing here from the blue 100-week moving average. When we look back here and here, it was not a reliable support level, but it was more reliable back here, but over here it was not reliable. So it is a moving average that matters, but if we were to pull back to that level again, due to the inconsistency of the support level, it is unlikely to be able to attract, continued influx of buyers, if it is retested. But so far, this is looking good. It is a support level that is working, so yes, bullish. Looking at, the daily data points, we do see here that daily RSI has risen to a level that has been a fail level recently. This rally here failed when we reached that RSI level, and also the distance here from the PPO, 20-day PPO, was also a fail level for the bulls. Here is the relationship between RBA and XLI. Yes, we do see that it's been in a major downtrend, so systematic underperformance vis-a-vis the XLI. Then we look at seasonality, like this. Then we see that we have not enough data to get the seasonality. Okay. Then let's look at the relationship. So here is the relationship between XLI, Consumer Discretionary ETF, and the S&P 500. What screams at me here from the top of its lungs is time cycles. Very nice time cycles, but so we do clearly have time cycles. The issue is that they have differed in duration. So they are not like squeaky clean, but you see that even back here, you do have this general rise, decline, rise, decline, rise, decline. And we recently have seen a significant declining phase that has retraced a very substantial amount of this rally. Based on the most recent price action here and these very nice time cycles, I do certainly get the feeling that the consumer discretionaries could enter a phase of outperforming the S&P 500. It is very important to be aware, though, when looking at these kinds of charts where we compare one asset against another, both can go down. Both can go down, but still you can get a situation where one, of course, is outperforming the other. So you might look at the chart and see that, oh, it's going up, but it's only going up relative to something else. So that's super important to be aware of. Okay, then we look here at the seasonality here for this pair. So over the last 5 years, we usually don't see any more outperformance of the XLI, nor over the last 7 years. Over the last 10 years, there is a slight tendency to outperform. So the RBA, Ritchie Bros Auctioneers, has a systematic tendency to underperform the consumer discretionary ETF, which is the ETF it is most strongly correlated with. We did see that, the XLI, okay, the XLI, strongest correlation with the XLI. Okay, so the XLI, it did bounce from a super important moving average, the blue 100-week moving average that is bullish. There is a potentiality of the XLI also outperforming a bit against the S&P 500 if we do get those nice time cycles. So maybe I will give this one a bit here to the bulls. But given RBA's underperformance against the XLI, I have to subtract that a bit significantly, so I can't really give this one more than 2. Okay, so we do end up with a score of minus 1.3. So the data is more bearish than bullish. The key line in the sand is that we do have resistance from moving averages on the weekly and the daily data points. And we do also have horizontal resistance. Seasonality is, however, very interesting, especially for April, but we are not in April yet. The fundamentals were atrocious, so I think that there is more reasons here to look for bearish opportunities for Ritchie Bros than bullish. So while the second-hand market for a bunch of stuff have seen a huge spike recently, it's based on very flawed logic, because if there are supply chain issues, which means that it's very difficult to make vehicles, that also means that it's difficult to make the parts that are in these vehicles, which means if you do buy a used product and it breaks down and you need a replacement part, and all of a sudden you find yourself back in the supply chain nightmare that we have had for a long time. So yeah, just something to think about. Okay, whatever you do, of course, you want to use stops, and if you get into the option market, then there are like fancy ways to bet on a certain direction of a security. And even if you are sort of wrong, you can actually be right by benefiting from the time decay of options. So that's also a possibility. But yeah,